A good leader will take responsibility for the failures, but share the successes. If everything is someone else's fault, people are going to see to that. I'm working with other professionals who are very, very qualified and very, very smart, sometimes better than me at a lot of things. So if something in my group is messed up, it's like, okay, no, that's on me. Something that happens great, it's no, great job. You want to keep people empowered. Definitely owning the failures, but sharing the success is an important.
What main personality traits were different between the Marine Corps and Wall Street?
I grew up in South Texas, in San Antonio, and San Antonio had a huge military presence. The military had a big influence on me, so I knew I wanted to do something like that. I took Marine Corps option, commissioned as a Marine officer, spent some time. I got a job with Goldman Sachs in currency operations. There's always a way to approach your professionalism. You're not going to be best friends with everyone, and your personality is always not going to click, but you want to focus on the common goal. But there also has to be like a continuous feedback and just knowing your worth and knowing why you're staying somewhere or why you're staying on part of this team. If you understand the challenges of working in the military, it's about having to make decisions with limited information, with sometimes some serious consequences. Larger corporations are thinking the same thing. Is it worth me issuing more shares? Have I bought back shares? Because if the shares stay the same and then our profits go up, then we earn more per share. You're constantly looking at different variables, but it also comes down to the cost of capital. Risk is important. There's probably famous cases when you look at banks themselves or even companies that the long-term outlook is good, but what's your short-term cash position? When it comes to risk, data and statistics, and the number crunching we have today, that's probably one of the better use cases for advanced data. And we can talk about AI, stuff like that. So you have to be very deliberate and you have to be transparent and you have to say, this is what we're going to do with this and this is our plan and this is why we're confident in the plan. That's what happens on every call. It's the CEO, CFO explaining, these are the decisions we're making and why, and here's why we're confident this is going to be critical to our strategy.
How long does it typically take before a client fully trusts you? Hello everyone, welcome to another episode for Money Talks Media. Excited that I have one of my mentors here, Al Kirton, here with me today. He has a lot of experience when it comes to banking, especially on Wall Street, especially in various boardrooms, and then before that he spent his time in the Marine Corps. So I want to welcome Al Kirton.
Happy to be here. Thanks for having me. I'm excited to dive into it today.
Yeah, let's get it. So Al, appreciate our relationship over the past few years, learning a ton, exchanging value, even the times when we had some drinks after hours. Yeah. So excited to bring our conversation in front of the mic, in front of the cameras, to give the audience some valuable information. So yeah, glad to have you here.
Excellent. Thanks for having me, man.
Yeah. So look, we're gonna go through 3 topics today around Al's experience, and the first topic we're gonna go over is how large companies make financial decisions at the highest level. Second topic we're going to go over is what Wall Street teaches you about risk. And the third topic we're going to talk about leadership, relationships, and why trust drives deals more than numbers. Yeah. So Al, I want to pass you the mic, and I want you to go through your experience from the Marine Corps and then all the way up to where you are today.
Yeah, absolutely. I appreciate it. My story is pretty simple. It's always about being curious and wanting to take measured risks and see what else is out there. We talked about this, numerous times over coffee or a cocktail. I grew up in South Texas in San Antonio, and San Antonio had a huge military presence. My dad was a born and bred Queens, New Yorker that joined the Air Force, and that's how I ended up being a Texan. So the military had a big influence on me. So I knew I wanted to do something like that. But in South Texas, everything's Air Force and Army. And I'm like, I really want to leave and see the world. And you have all the commercials and things like that. So I thought that by attending the Naval Academy, by earning a commission as either a Navy or Marine Corps officer, I would get out of South Texas. And that's exactly what I did. So I went to the Naval Academy. I took Marine Corps option, commissioned as a Marine officer, spent some time in Japan, got stationed in California, and then after 9/11, ended up doing 2 tours in Iraq, and that was good for leadership. I was at the time I was deploying. I was a 29 and 30-year-old captain in the Marine Corps in charge of a company, company commander, convoy commander, and some of the troops that I was in charge of had 30 years experience, and I had a couple that were Vietnam veterans. So you imagine,
Yeah.
you talk about the essentials of leadership and being able to learn and make sure you have 2 ears and one mouth for a reason. So that was a good way for me to understand how to lean on expertise to help my leadership decisions. So so because I always thought that I had perfect timing, had some I got a job with Goldman Sachs in currency operations. So this was the bare bones, confirming trades, confirming derivatives. It was just
Tedious.
it was tedious. It was tough, but it opened my eyes into the world of, hey, I didn't even know what an investment banker was. I didn't know what sales and trading was, but I got thrown into the pit, and I'm learning, looking around, and I remember talking to a mentor. Said, I want to do that. He's like, okay. He says, well, based on your qualifications, you need to go back and get your MBA and come back as a different person. That's not what everyone has to do today, but for me, and this was like pre-financial crisis, that was the path. So, applied to a few places and decided to go to the coldest place possible for me at the time as a Texan was University of Michigan. So a couple of winters in Michigan. That's what brought me here to Charlotte for investment banking with Wells Fargo. And that was the beginning of, okay, you're in investment banking. And that's when you learn that there are so many different types of jobs on Wall Street, and there's a personality and a workflow type and a fit for each one of those jobs. I would say someone working in sales and trading, someone a smart economist, someone that's doing business banking, someone that's actually corporate finance. These are all different types of personalities, and you see that massive, that massive diversity in experiences and personality types. And because people say, "Oh, are you a banker?" Oh, that means one thing. You're a finance bro. What? No, there are so many different opportunities out there because
which a lot of people don't really
right.
understand.
Yeah, and you think about what a lot of people have opinions, good or bad, about banks and larger banks and community banks, but it's just a simple thing. We need capital to make things work. So that's kind of and for me, moving over to my current position, that was along the lines of you learn from successes, but you learn from failures, and there's been times when things didn't work out. I wasn't the right fit. I wasn't ready. I wasn't I wasn't happy, and you could see it on my face. So I found my place on Wall Street, doing something that I'm good at. I think I'm an okay storyteller. If I'm passionate about something, I can sell it. And I get to talk to companies today about what's happening in the markets, why it should matter to them, what we're looking at, seeing the data, and then, maybe they'll hire me, or maybe I can become, a trusted advisor to them for their decision making, and not necessarily just for that company, but for that company's customers that are being affected by the decisions that those finance teams and the C-suite are making.
So, what main personality traits were different between the Marine Corps and Wall Street that you've noticed?
That's a great question, because it seems like there's a natural inclination to say, oh yeah, this is going to be high performance, it's rigid. Well, not really. I think it's I don't want to say the modern military. I say it's, if you understand the challenges of working in the military, it's about having to make decisions with limited information, with sometimes some serious consequences. And there's all kinds of old military axioms about just hey, just the worst thing is indecision. Sometimes you have to make a choice with the information you have presented, and you have to stick with it. So it's stuff like that. But I think the connection, the through line that I've seen is the ability to learn and be very adaptive. It's so nowhere in that is rigidity and being able to say, here's my list. I can't deviate from the list. That's not the way it works. We have to be nimble. We have to. There is one common phrase among the Marine Corps, and it's improvise, adapt, overcome. But I would say the more pop culture one, and maybe it's Mike Tyson. I don't know. Everybody has a plan till you get punched in the face, right? It just so you have to be able to say, okay, this is what I thought it was going to be. Limited information. Here's how I'm going to make my decision, and I found that to be more relevant than knowing how to, follow directions immediately, knowing, we're just gonna we'll assess some risk and we'll charge in the battle. That's not the way it works. Especially it should be that's not the way it works when you have, troops and equipment you're in charge of and the mission you're trying to follow, and it's definitely not going to work when you have, people's money and livelihoods on the line when you're trying to make decisions. Oh, do I do this, do that? So I think the ability to improvise, adapt, and overcome, and just be calm and steady in the realm of unknowns. I think those are some of the best personality traits that have carried over for me from the military to my time in finance.
Okay, so let's dig into your
Yeah.
finance experience. So people think raising capital at the corporate level is a straightforward process. If people want it, they go get it. Can you walk us through what that looks like from the inside?
Yeah, it's absolutely not the case because it's if in the simplest terms, I'm not going to say that it's not an agent, but think of me as an intermediary where there are folks that have capital and folks that need capital, and it's a matching process. It's what's your risk tolerance? Okay, you just want government 10-year treasuries, fine. That's going to be part of what you're purchasing. You're assessing, do I buy this one? Do I buy that one? How do I hedge that? But in my world, it's every company and every investor has a desire and a need, and you're constantly playing that matching game. It's like, well, I want to borrow, $1 billion over 10 years. Okay, do I do that this week? Do I wait till I have my earnings announcement? And then I know that ahead of time we're in blackout period. We thought we were going to sell 20,000 widgets. We sold 25,000 widgets. What are investors going to think about that? Well, what's the story behind it? Did we only sell 5,000 widgets the last 3 quarters, and this is catch up? So it's just as that company is thinking, yeah, I want to borrow $1 billion over 10 years. The investors are saying, what's the best interest rate that this company, should be paying us if we're going to give them $1 billion? So it's a matching process. And to you and I, seeing that, a company can borrow $1 billion over 10 years at some insane low rate, you're like, well, that's just funny. Well, not really, because on the margin, whether they're borrowing at 4.35% or 4.36%, that matters a lot, And then it's like, okay, then you have the risk of the bonds that are outstanding. Is that company going to be a going concern for the next couple of years? So the numbers are big. So even the small percentages or basis points really, really matter. So that's some of the
Especially
things that
over millions of dollars and
Yeah,
maybe billions.
yeah, and even from this, no company is an island, right? So, maybe these widgets were cool that you're making, but there's a new one out, the super widget, and you don't have the technology. And this company says they can make 25,000 super widgets, but they haven't been around that long. So I'm gonna let them borrow, $1 billion over 10 years, but I'm probably gonna charge them 6% because it's a little more risk, but I think they have a better thing going, right? So it's just you're constantly assessing the risk. Now, what does that mean? Like it's when at the largest level, you have equity analysts that are just all they do is dive into the numbers and know exactly how many widgets are produced here and how much aluminum comes into a widget, how much oil comes into a widget.
Could you break down what a widget?
Yeah, this is just the widget, just my fictional. We're talking about any company selling goods and services. Just in the classic business sense, you're trying to figure out what's that fictional product, what are the inputs, what are the costs. But there's always competition trying to do it better. Is there a company out there that will make this entire widget that you're producing obsolete? But you start getting into it, and that's not just a problem for the management consultants and the COO and the chief transformation officer. That's a problem for the CFO as well, because in any company, it's still like what is the outlook for your company, and that's going to determine your cost of capital. The people in the boardroom know that, the bankers know that, and the investors know that. They're like, we have to put this $1 billion to work, and we want to find companies that are going to have growth. We want to find companies that have aggressive growth. You know what? I'm running a pension fund, so I got to find someone that has moderate growth because I can't lose any of the money as an investor. So everyone's trying to match their levels of risk to the return that they want to see.
Got you. Could you walk us through like maybe a company that may need capital, and then who's in the boardrooms, who's debating? I mean, I'm sorry, not boardrooms. Who's in the rooms making the decision, who's debating, etc.
Right. So there's always needs, and this is I'll stick to like fictional companies. But you think about any. This doesn't have to be widgets. We can say whatever. Let's say that they're making a fancy new vehicle. They're looking at so many things, and this is the power of having a large bank with multiple experts to come in and talk to you. Say, look, I'm trying to make cars. Engines are made here. They come across the border this many times. Okay, what's tariff policy going to look like? Well, I guarantee these large companies have people on the ground, lobbyists in D.C., trying to figure out what is the tariff rate going to look like now. What is it going to look like 6 months from now? Okay, so now that goes back to the company. We have an idea of our input costs. Okay, so what else do we know about we need aluminum, we need steel. Okay, do we have smart commodities traders at one of these banks that has an idea where the price of steel is going to be 3 months from now, 6 months from now? You have smart people arranging shipping costs. So these are all inputs that are going into what the CFO, the treasurer, and the CEO is ultimately responsible for to make sure that they can make that luxury auto. So then you put all that information together. I know how much it's going to cost to make it. How much are we selling? What are our goals to sell? The company has a smart marketing team. They have incentives that,
And how long is this process typically go for?
A few months? Probably a few months, but it's you also know that if you take out a mortgage or you have a loan for a car, these are the terms. This is what it's going to be. So okay, that's fine. The companies know exactly if they have 10 of the largest banks in the world, and they're all saying, okay, great, $100 million, that's your line of credit. So $100 million times 10. So that's the company's line of credit or their master credit facility. We're going to do this, and it's going to last 5 years. So if I'm a giant company, and I know that my main line of credit for general purposes, building factories, everything, buying more aluminum, that's my general line of credit. I'm selling stuff, but you still need credit because sometimes the sales are lumpy. I'm going to be looking probably 12 months to 18 months out before that line of credit expires. I got to go talk to those big banks and say, hey, are we still good? Are you going to step back into the revolver and keep that $100 million line of credit? Or is there another bank that's like, you know what? We have a little more capital now. We want to be a lender to you. So those conversations are happening way out. And then you'll have a couple of bankers saying, yeah, I think this should be you don't need 20 banks in your line of credit. You probably just need 5 because, you know what? The next time you do this loan, it's going to be more expensive. And you've already sold so many fancy cars. You kind of have enough cash. You're doing okay. Mm-hmm. So these are just conversations that are ongoing. And that's how they, but that's just for determining the line of credit. Now, what if it's something even more significant? What if it's event driven? So you know what? This upstart company is making, I don't know, the best steering wheels in the world, and we can't do that. We're going to buy that company. Okay, so now you've probably been pitched by a mergers and acquisition M&A banker for a couple of years of like, these are the best steering wheel companies. I know you want to buy this one, but here's some options. So maybe to buy that steering wheel company, you don't have enough cash, so now you can go out and finance that, and you've convinced all your investors and all the other banks that by you buying this, 1 + 1 is going to equal 3. We're going to be a powerful company. Yeah. So sometimes there's event-driven financing for that, and then maybe sometimes you've waited long enough, you want to build a factory, but you're not going to pay for cash for that factory, especially if we talked about rates being low, not necessarily low for individuals borrowing, but for a large corporation, it's like, you know what? Why don't you just borrow, and then you can build that factory, and the increased capacity or the size of your company will enable you to pay off that borrowing of that factory you just built. Now, is that a factory or is that a data center? But now you see why some of these companies are borrowing large, chunky investment grade debt right now to pay for these projects. So those are the things that happen. And to answer the question about the timeline, sometimes if you're looking at let's start talking about our main credit facility. That could be like a 12 to 18-month conversation. If you're talking about a company you want to buy, even though that announcement comes out, that work, it takes years of just always identifying and refreshing what companies out there, what companies or pieces of companies or assets can we buy that would make us more powerful. So it's those conversations are constantly ongoing, and that's like the power of having a good relationship with a team of bankers that are going to be smart about different things to help that company grow.
So let's say that a corporation, they need money. How do they make the decision between issuing debt or pursuing like an equity offering? Like what
Yeah,
drives that choice?
yeah, that's a little more nuanced, right? It's so there's a couple of things that go into that decision. It's and it all should revolve around shareholder value, right? It's if you issue if you issue equity, are you going to dilute your current equity
Earnings.
holders, right?
Yeah.
If what's the grand cycle of the cost of debt? It's just the same thing as you get a mortgage and you get a certain rate. The minute you get that mortgage, you start getting letters in the mail. Hey, you should refinance right now. Right? Just even if rates have ticked down a little bit, even if rates are flat, is you should do a cash out you get all these offers. So larger corporations are thinking the same thing. Is it worth me issuing more shares? Have I bought back shares? Because if the shares stay the same and then our profits go up, then we earn more per share. Because you're constantly looking at different variables, but it also comes down to the cost of capital. When I say is debt cheap right now, that's always a relative term, right? So I've definitely been in situations where I'm talking to large corporations about interest rates and things like that. And some of these companies are like, look, we're not really worried about the rate per se. We worry about the spread. We've been around for so long, it doesn't matter. Like here's our credit rating. Here's a credit rating of the U.S. government. We're doing good. So they're not necessarily worried about the headline number. Is worried about what is their cost compared. What is their 10-year debt cost compared to U.S. Treasury, like the dare I call it the risk free rate. But so they're worrying about different things on the margins. But there's a number of things that go into that. How is it going to affect our stock price? How is it going to affect our credit rating? And just the same thing as like you and I, going to Experian Boost and see what our credit score is. You have large ratings agencies that are going to decide, well, this is the corporate credit rating, and this is the credit rating of not just the corporation. Here's the credit rating of one of the operating companies in there that's actually making this stuff. So that comes into play as well. And there are also decisions that maybe we're an upstart growth company, and say, you know what, your company you would be able to borrow at 4% if you had a double A rating. But then if you're doing that, then what if you wanted to grow aggressively? Some companies are large, stable companies that have been around forever and they just pay a dividend. Some companies like, you know what? We want to have a little more leverage. We want to be levered 3 to 1 because we want the ability to buy something or get rid of something because we want to be that growth company. And the same thing is if you're looking at your portfolio and say, look, do I want to own, this company that is focused on rapid growth? Maybe they're a pharmaceutical company that's looking at this new drug trial, or do I want to focus on big giant 100-year-old steady company that's always going to pay me a dividend? Because all I care about is capital protection. I'm not seeking aggressive growth. So these companies are like, they have to understand where they are in that cycle as well. All companies are created equal, and you'll see like if you're watching some of the news shows, these are the biggest movers, and the biggest movers in the Russell 2000 have nothing to do with the SP 500, have nothing to do with the Dow 30, right? These are companies that are in those larger indices are the biggest, most stable bellwethers of their industries. You should not see a massive shock up or down in companies like that. That's not what they should be doing. Now the other companies, upstart, growth companies, they have different cost of capital and they're thinking about different ways to grow, and they're the ones that are more likely to be more opportunistic and not worry about the steadiness of the stock price as they're looking to do I issue debt or equity.
All right, cool. So you talked about capital allocation earlier. Now I want to dig into risk. Could you talk about the risk models that you've worked with before and how they may have changed any of decision making?
Yeah, so I think there's always risk is important, and there's probably famous cases you look at, banks themselves or even companies that the long term outlook is good, but what's your short term cash position, right? That's something that can vary companies. You have to be able to manage, how much money you're making today, how much money you expect to make in the future, what are your obligations in the future, you may have a new product that you needed, it's not ready today, and if it was coming out today, that would save your company, and how much time do you have? So I think a lot of when it comes to risk, the data and statistics and the number crunching we have today, that is, I would say that's probably one of the better use cases for advanced data, and we can talk about AI stuff like that. But if you're measuring the right things, you should be able to spot trends before those trends become emergencies. But you have to be measuring the right things. Any company has to be intellectually and technically honest with themselves. It's like, are we measuring the right things? What are the data telling us? And how do we react in the short term? How do we react in the long? Is this a tactical decision, or is this is this an existential crisis for our business? So when you're looking at risk, that's important. But let's take a step back. We were just talking about what type of company are you, and do you want to make big bold bets, or is the nature of your company to be steady Eddie and make sure that you're just paying out dividends to your long term shareholders? So if you take both those things into account, you know exactly what's your tolerance, right? What's your tolerance? And a large global conglomerate, they're gonna have the ability to, I wouldn't necessarily say make more expensive bets on things, but they have this scale to where they can try to bolt on something for 100 million, or maybe they change something. We don't want to use our vendors. We want to sell direct. Sometimes that works. Sometimes that doesn't.
Are they mainly cash heavy?
Not necessarily. I think sometimes it depends on industry. I would say sometimes tech today is very cash heavy, but a lot of the industrial, if you have a lot of capital costs and you have big expensive things made of metal that are moving very slow, then you're usually a net borrower. But look, you're going to make a lot of money because the stuff you're selling is expensive, but the inputs are also so expensive where you're not just sitting on a load of cash. And then you got to think about, from an investor's perspective or a shareholder's perspective, are you sitting on too much cash? Are you familiar with the term dry powder?
Yeah.
Yeah. Okay.
Available cash.
Yeah. Great. Dry powder. But yeah, if we want to buy this company, we want to have it. It's okay. But in the meantime, you're sitting on XX 100 million in cash, and that cash is not earning anything for our shareholders. So sometimes shareholders get antsy and they say, okay, what are you going to do? You need to buy back shares, issue a special dividend, or you need to pay down some debt, or you need to go buy something, because shareholders get antsy. It's like, okay, you have a great company, you're sitting on XXX 100 million of cash. That is a waste of
They
resources.
couldn't put it in highly liquid assets or anything.
Well,
Or investments.
well, but then what happens if this new technology at this other company comes up for sale and they want to use that? Okay, maybe they don't want to use that. But and there's always different examples, and I think sometimes we tend to follow the tracker of how much cash is Berkshire Hathaway sitting on, and what are they going to do with it, and what are they going to buy? That's just, and then it goes into the same thing as your portfolio. It's institutional investors. Okay, how much cash should a large institutional investor have, and what's the magic percentage based off of what your advisors are telling you? What's the magic percentage based off of the optionality you want to have to do with that cash? But it's I would say that we get a lot of headlines from the tech universe and the Mag Seven, and they tend well. Wow, this conversation is probably 5 months ago. It will be different when you look at the large hyperscalers within the Mag Seven. I would say they tend to buy things with cash, but now you've seen some of the largest borrowings in recent times were to build out some of that infrastructure for data centers, AI, hyperscalers, whatever term you want to use. But these firms are still sitting on a lot of cash, which brings me to one point I want to make. It's and this all goes back to interest rates. It's like, well, if you're sitting on 100 million in cash, why would you borrow? Not excuse me, not 100 million. If you're sitting on 100 billion in cash, why would you borrow 30 billion to go build something? Well, what's the rate you're getting? If you want to save that cash for something else opportunistic, and you can borrow, and your company's so big, you're borrowing at half a percentage point over the U.S. government treasury. Why not?
Yeah, it makes sense.
Yeah, why not? Yeah,
And you have a runway too,
yeah,
if you need
yeah,
to pay for it.
yeah. So it's just those are all the things that go into what is the company going to do if they're sitting on a ton of cash. Well, it just depends on the goals, and this the same thing is anything in business. You have to be very deliberate, and you have to be transparent, and you have to say, this is what we're going to do with this, and this is our plan, and this is why we're confident in the plan. That's what happens on every call. It's the CEO, CFO, and explaining, these are the decisions we're making and why, and here's why we're confident this is gonna be critical to our strategy.
So you've seen multiple market cycles. What do retail investors and business owners fundamentally get wrong about how decisions get made? With lots of environmental changes. Like, it could be macro environmental changes. It could be at the micro level.
Yeah, this is something that I'm passionate about today. Is working with economists, make sure you're paying attention to the inputs, and what happens is to it's not about being a contrarian versus following the herd mentality. It's about identifying what are the leading and lagging indicators. What are the data telling us? If it shouldn't be any shock. Let's talk about housing prices and things like that. I think sometimes you see headlines, oh my gosh, the interest rates on mortgages are still up, but why are prices still going up? And I think the fundamental reason is that there's not enough houses for the people out there. And it's like, oh, well, but the houses jumped so much during the pandemic. That's right, because people wanted to leave the city and be safe in a single family home outside the city. And that caused a massive jump. And there's still people, finding partners, having babies, and wanting to move out and get their piece of the American dream, white picket fence and all.
Do you still believe that exists?
Yes,
Or
but
can it exist?
it should. I still believe on a personal level that the way things are structured for real estate, that it is always good to enter into a mortgage for a house you can afford. That can be a whole other podcast about that. But it's and people tend to get upset about that. It's like, okay, well, if you're gonna pay $3,000 for rent over 10 years, or what if you paid off someone else's mortgage, and the usual pushback is, oh, well, I'm gonna invest. Okay, how many people are taking, if you could get a mortgage at the same rate, not as the rent? I would say you need to have a mortgage and have equity over everything else. And that's always a personal decision. But what you don't want to do is figure out 10 years later that you've only paid rent for 10 years and you haven't invested because you were just trying to barely make your rent. That's like the false equivalence. But that's just more. But just think about, just my example with that is if you're looking at housing prices, and this is not necessarily tied to picking a certain equity or try. This is just talking about the data and the trends, and not being shocked. If you're looking at the data, you say, okay, well, even though mortgage rates are up, people still want somewhere to live. The majority of people still want to seek out a mortgage, and even though mortgages are high, does it mean that we're going to have a blockbuster spring selling season? Probably not. but there's still like, what is it? Dislocation, divorce, and death. There are still people with the 3Ds that they got to get out of that mortgage, or they have to get into something. And so so my point in that example is that you can't necessarily you shouldn't be surprised that, you know, generally housing prices have continued to creep up. Now, is that going to be the same as Boise versus Allentown, Pennsylvania, versus Atlanta versus here in Charlotte? It depends. Are you in a place where you have, what is it, 80 people moving a day to Charlotte, or are you in a place where, you know, you have a lot of retirees? Are you in a place where you maybe had a major employer folded, and that's, you know, what are you going to get out of it? So but real estate's very local. But my example to that is, you shouldn't be surprised if you're paying attention to the right data points and you're following the right statistics. And it's not just the 1 point here, 1 point there. It's looking at statistics over time. And just think about, we can talk about physics for a second. When you're looking at things, you have to know the difference between, you know, position versus velocity versus acceleration, right? It's like, what is it today? Okay, well, what is it today versus yesterday? How fast has it ticked up or gone down the past 3 quarters? So now, if, you know, and this is why, like, you know, math and data science and being able to read a chart or a spreadsheet is so important, because identifying trends. We don't have a crystal ball. No one's, you know, prescient, but being able to identify trends based off of position, velocity, acceleration, that's a very, very powerful thing. And just to wrap it up, I think that's one way where, if you're serious about one thing, or you're seriously tracking one commodity, one stock, or just one part of the economy, if you're looking at the right data and trends, there shouldn't be any shocks or surprises. And I think there's a lot of noise, and sometimes we tend to think that just because there's a giant collapse, that someone was shocked or surprised. Well, not really. Maybe it's just people that, you know, maybe it's a certain set of investors that are doing profit taking. They had this pegged at a certain level. Hey, it gets to 500, I'm going to drop out. And there's a lot of intuition. There's a lot of things like that. So it's you know, big swings up or down doesn't necessarily mean that someone wasn't paying attention or they're surprised. They were probably watching the data and decided it was time to step out or step in.
Well, thank you for that. Thank you for that. And obviously, like, you didn't make these decisions based on, like, spreadsheets alone. You had to make these decisions based on relationships, based on leadership position that you were in. So talk about what you mean about, like, how trust drives deals more than numbers alone.
Yeah, that's so important. People do business with people they want to talk to, they want to spend time with, they want to be around. Like, we're spending an hour today. That means that you value my time, I value your time, and we're carving out an hour. That's an hour that, I don't know, I could be sleeping. Yeah, sleeping, hitting the gym, doing meal prep, you know, washing my car, whatever. Catching up on reality TV, whatever. But, like, the time's our most valuable resource.
Watch a Lamborghini.
Exactly. That's everybody out there in podcast land. Josh is thinking about his Lambo now.
Yeah, definitely don't have a Lambo. Yeah. And they borrow yours.
Yeah, exactly. That's a fictional Lambo. But that's a good point. It's about the timing and being honest with yourself. But these relationships are valuable. You want to make sure that you're being honest with the people you're spending time with. You know, no one wants to be hustled. No one wants to feel like someone's wasting your time. But you sit down, you're deliberate with someone, you listen to what they have to say, and I think I'm not going to say modern society because it makes me sound like an old person. And then, you know, people my age have been complaining about modern society for the past 2,000 years, and in 25 years you'll be saying the same thing. These kids with their damn holograms are not even really. There's always something. All you do is talk to your Android all day. You don't. You and
talk to your AI bot all day.
Exactly. You don't talk to a regular person. So you don't want to sound like an old curmudgeon. But I think it is. Relationships will always be valuable. People want to feel validated and important. And the way that works in business, I just think people want to do business with people they like.
Yeah.
Sometimes we worry about a couple of things. If you're a big company, it's like, well, we've been doing this for so many years. You should always choose us because you're a competitor. You know, you're your dad and your granddad trusted us. Is okay, but are you still providing the same amount of value? Whereas the upstart person's like, okay, we have nothing to lose. Like, so I'm gonna go out and chase this and chase that, and I'm gonna build it based off of relationships. Because if we get a win, and big company XYZ does it 99 times instead of 100, that's a win for us. So I think relationships are valuable whether you're trying to maintain something or whether you're trying to build something. But just the fact that people you have a good relationship with, and everyone doesn't like to be sold to.
Yeah.
But people do want to have good conversations about things that are important to them. With because their time is valuable.
How long does it typically take before a client fully trusts you? From
Oh
the
man,
beginning stage to, I mean, the average estimate.
no, that's a good point because we work in. This is the date whether you're doing marketing, like placing ads on social media, you're doing cold calls, emails. It's gonna take you 5 or 6 times of saying the same thing before someone realizes, oh, you're selling XYZ. Okay, let's have a conversation, and that's what you have to just be deliberate about it, and you can't. Somebody don't ever send an email and then reply to the email. That's just you don't want to be too obnoxious. Yeah, yeah. But you also have to have conversations. I just had some good conversations this week. And like, hey, would you want to be contacted this way? And one entity said, yeah, that works for us. The other one's like, no, we're too busy. That's just too intrusive. Don't do that. Just give me a call, and we'll grab coffee or something like that. So everyone has a different. You have to be honest with yourself, and you have to understand what the other person wants when you're trying to, make the case for yourself as a business.
Do you typically get warm leads, like introductions? Do they help?
Yeah.
Or do you rely more on like cold outreach?
Well, sometimes it's a little bit of both. And I would say I've had some tough leaders, that I work with. But probably the toughest was when I thought I was already a smart guy, thought I was a confident guy, almost bordering on arrogant, right? Yeah, because you have to have confidence in yourself because everyone else thinks you're gonna fail. You got to believe in yourself.
And you're in banking.
Yeah.
So
That's just you're definitely
beast.
you're in the shark pit. But I had never cold called someone before, and oh my God, that is a special kind of torture. But once you do it, and you see the value of you're gonna call 100 people, probably 40 gonna hang up on you, 30 gonna be like, oh, okay, I don't have time for this, and then maybe 10 or so, okay, that sounds interesting, and maybe one out of the 100, okay, let's chat some more. So whether it's like cold calling or and now what do we call it now? Your elevator pitch. It's like if you're stuck in an elevator with 30 seconds and you see your dream executive, your dream influencer, what are you gonna say? It's like, oh, okay, blah 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 blah. That's what we want to do. But you got to have right timing. You ever watch the show Atlanta? Okay,
I've never seen that.
so it's a scene in Atlanta where it's so silly, but one of the main characters is a famous rapper in Atlanta, and this other young kid, upstart rapper, and he wants to like rap in front of the guy for like 10 seconds, and it's just like the worst timing, and also he pushes him out of the way. It's but you got to know.
Wasn't ready?
Yeah, no, there was like an incident at the mall. And
Got you.
It's definitely just maybe that show is not for everyone, but just think about sometimes you're trying to give your pitch and you gotta be able to read the room and know the timing, but. Yeah, stuff like that's not easy either. It's something that you're not born with. You have to practice it. You have to practice, at a cocktail party. How do I make it not awkward and say what I have to say? You see people going on Shark Tank and things like that. How do you pitch your business and not get slapped in the face when they say no, I don't like it? How do you pick yourself up and somebody's hanging up on you, the door's closing in your face? You're like, okay. What do I need to adjust? Do I still believe in myself? Those are some valuable things when it comes to, building out your ability to sell and your ability to market your idea.
So let's go back to your team structure. You lead a team, senior finance executive at your current company. Going back to the military, what did they teach you about accountability, leadership, leading teams,
Yeah,
etc.?
there's a lot of that's really really. I'm glad you asked that 'cause I think about that every day. It's a good leader will take responsibility for the failures, but share the successes. I think that's essential. You just if if everything is someone else's fault, people are going to see to that. And I'm working with other professionals who are very very qualified and very very smart. Sometimes better than me in a lot of things. So if something on in my group is messed up, it's like, okay, no, that's on me. Something happens great, it's no, great job. You want to keep people empowered. So just definitely owning the failures, but sharing the success is an important, thing. I would also say, I I don't believe in like the whole. It's accountability, but hyper accountability for the sake of being rude to someone is never that's never good. So I would say it's also good to praise in public, and if you have to correct someone, do that in private. It's no reason to humiliate someone. Just once again, this is unless you're independently wealthy, you have to go to this position, and you're spending more time at work than you are with your family or your friends. So it's no reason to be miserable. So I think in addition to like having accountability, it's make sure you're being kind in the right way. It doesn't mean that there's not a sense of responsibility, but I think that's also important. And I would say one of the things that I've carried through, and this is like an old military thing. We talk about baggage. So you have all kinds of baggage in your like relationships. Daddy issues. I didn't like this person that bullied me 30 years ago. I'm still bitter over this relationship, so I'm never gonna date someone that has the same hair color. Whatever. Just things like that. So there's I always like the model of the you have two small bags of leadership. You have the good bad bag and the bad bag. So as you're getting feedback and you're meeting different leaders, I didn't like that leadership style that goes in the bad bag. I really like this goes in the good bag. So when you become a leader, you should be pulling from the good bag. You know that. So you know what works. You know how something made you feel, and it's like,
Didn't like that.
yeah, I
too
didn't like
much.
that. So if I'm in charge, I'm gonna do this because I know that makes a stronger team. Yeah.
How do you balance? Because I mean, obviously, you watched a movie like Wolves of Wall Street, or Industry, or Billions, like all these finance movies or shows.
Trading places.
Yeah. So I mean, and they show like how very aggressive like
Yeah.
the leadership can be. Like, how do you balance that being in finance?
It can be, and it's also about being yourself, not trying to come across as tough if you're not. That's just disingenuous. It's just it. You also have to have some self realization. I know that there are certain things I'm not good at. I know when I feel myself getting
Getting a little
agitated about
upset.
something, like okay, just to like tone it down for a second. But there's definitely tropes and archetypes in the world of finance and in corporate America. And sometimes you're just sitting down at lunch with someone who's like, you know what? I don't like this person. It's just, why did I
Do
reach
you
out
say
to
that in
this?
your head about me? when we're
No,
having
no, no,
lunch?
not at all. If you're spending the time with you, I look forward to our interactions. But there are some, it's like, man, I really got to deal with this today. And it's just,
It's hard.
it is. But there are like some archetypes and tropes. But I would also say that it's also changed over time. And I think whether it's the nature of trying to recruit motivated young people into the business today, no one wants to deal with being screamed at by someone at 2 in the morning. No, that doesn't exist, and we're not going back to that. I know there's like oh, the
Was
younger
that
generation.
effective?
No,
Then?
it was never effective. But you're chasing the lure, bro. You're gonna have so much money. You're gonna have fame and success, and it's like, well, now probably not even the generation younger than that. They don't care. Like, no, I'm
Not
I'm
doing that.
sorry. This isn't healing for me. I don't want to do it. Okay, so And no one wants to do that. So how are you going to find that next young talent to continue and come to your business and want to do this? You got to change the way it works. And I think that is ultimately for the better. There's no reason whether you're I think about all the tropes, not just in Wall Street. Think about like the Devil Wears Prada, where just are you going to be you be assistant in Hollywood? Like no one's putting up with that stuff anymore, and I think that is for the better.
And people remember the way that you treat them too.
Yeah,
Like,
yeah.
you never know where they're gonna be. They could be
oh man,
they could be your target client. You know, if you treated someone wrong, I'm not saying you did this, but if you treated someone wrong and you now may need them one day.
Yeah, and that oh gosh, it's just and that's not even about burning bridges. It's just about treating people with respect.
Yeah.
And when if your name is mentioned in a room that you're not in, it's like oh god, not that guy. It's like oh no, he's pretty good. You should give him a call. I haven't talked to him in a while, but yeah, he's doing something good. And it's just about treating others how you would want to be treated. And that oh my gosh, that is the one thing that's missing. Is just sometimes you just come across terrible personalities, and having a terrible personality and a terrible attitude, that gets you so far. And then you find yourself stalled out in your career, or find yourself just out in the cold. And it's
why is that? Because people don't want to work.
Yeah,
with you.
I have no desire to spend time with that person. He's terrible. So you better be the best in the world at what you do if you're going to act like that, because that's your time doing something like this is limited. Absolutely limited.
Have you ever had to balance that with maybe someone that you didn't want to work with, but you needed them to get the deal done?
Yeah. I mean, there's always a way to approach your professionalism. You're not going to be best friends with everyone, and your personality is always not going to click. But you just you want to focus on the common goal. But there also has to be like a just continuous feedback and just knowing your worth and knowing why you're staying somewhere or why you're staying on part of this team, or also just maybe saying, hey, just I like doing this, but I don't like that. And it doesn't mean you're not held accountable. It doesn't mean that you can't have a boss telling you what to do because of certain things have to get done. It's not about that. It's just about knowing your own personal limits. And I think people will come into terms, post-pandemic, being a human being. Look, I'm not going to be, don't email me Saturday at 9 p.m. It's like, nah, just, it's being a little bit more guarded and having pushback. And I think even in this, kinder, gentler, more human world, looks like we're doing okay. And then everything's still efficient. Just, if I'm going to take a Zoom call for, with my dogs barking in the background, am I getting the work done? Yes, that's just as fine.
And it makes you more human, to be honest with you.
Yeah.
So at what point in your life did you realize that relationships were important, and when did you start building them before they became clients?
We talked about like having jobs that I didn't like and jobs where I wasn't good at that. And it's just about being intellectually honest and knowing that just because I wasn't good at XYZ in that role at that time doesn't mean I'm a bad person or not intelligent or not valuable or just I had some humbling moments where like this is just not for me. And it's okay to accept that and saying, okay, just I'm gonna move on. Let's stay in touch. And there have been instances where things didn't work out for me, and I've gone back to some of those people, and they've become bigger advocates because they saw that I was happy. They saw that I was pursuing something. They saw that this is actually Al's doing much better over here. He wasn't good at that. He knew it. I knew it. And now he's much happier. And I'm happy to keep in contact with them. So I think those relationships are important. And like I said, you should never give up your self-value. And we just talk about imposter syndrome and do I fit and stuff like that. But you never give up your self-value. But, there will be certain times when things just this isn't the right place for you right now. And that's okay. To figure that out is nothing wrong with that. And I think that's what makes you happier. So to answer your question, like, there are relationships that I forged even in those situations that are still valuable today. So now you come out of your cocoon as a butterfly. You still you can talk to some of the people you knew as a caterpillar. That's okay. That's okay. They maybe they saw you have potential, or maybe they didn't know. So, this person's doing all right. I'm happy for you. There there's certain people that I know that just look. I know they were in the wrong position. Now I see them doing something else. I'm like, good on it. You figured out what a lot of us have to figure out. Like, this is good for me, or this doesn't work for me, and doesn't mean I don't like you or I'm never going to talk to you again. But it's those relationships are just as valuable as the ones that have been great all along the way.
Have you found that you've aligned with some of the other, I guess, like clients or people that you like doing business with? Have you aligned with their core values? Have you found that to be the main reason why you've connected?
Yeah. There's definitely somewhere it's. I always say that you have to get a life. You have to have something that you're passionate and care about that has nothing to do with your job. You don't have something to talk about, and you'd be surprised whether it's golf or whether you're really passionate about, I don't know, the
Education.
yeah, education. You really care about the Las Vegas Raiders, or just something like that, or you really care about teaching youth hockey. A lot of people out there have a whole other life outside of what you're seeing on the Slack message or team. Just they have things that they care about, and I found that, just being honest, what are you doing? Hey, there was probably a time right at the end of the pandemic, like every Zoom call was on. I'm like, all right, what's everybody watching on streaming? And that just, it perked people up because we were like, okay, I didn't watch that. Oh, no, you have to go back and watch, all 8 seasons of this and the spinoff. I'm like, oh God. So it's just, but that was an exciting period because we were getting to be more human. And he's okay. What are you doing? So I'm really into collecting cacti. I'm like, cactus, like she's like 30 cactus. She's take the Zoom camera, pan it around. I'm like, oh my God. So it's just, people get to be people. And it just goes back to what I was saying at the very beginning. People like doing business with people that they get along with. So I just think just being more human and getting a life. There's a very, very large client I have. One of the best clients, one of our longest standing clients. And there's a lot of international people, like just probably 3 different continents represented in that one meeting I was in. And this was a very important client meeting of mine. And I was talking about coming from Texas, and there's another gentleman. He grew up. I think his father was like a lawyer for like the UN. So this guy's lived around the world. In the middle of the meeting, we start talking about barbecue. And I said, I'm in Carolina, but I'm really from Texas, and I'm going here. And at the end of the meeting, I sent him a map of different barbecue styles around the U.S. And that was years ago. And now we talk about professional stuff on Wall Street, interest rates, and the Fed, and the global economy. But that was like our first big meeting. He just wanted to talk about barbecue, and it was like so refreshing because I was completely prepared. So okay, here's what we're doing. Here's what we're seeing in interest rates. Here's where the 10-year Treasury is going. This is what's going to happen in the market. And we ended up. The conversation was hijacked about different styles of barbecue.
But that was your connection.
It was so refreshing because because we're in that conversation and we kind of perked up. But I want to say that's our best relationship today. It had nothing to do with me working on Wall Street, MBA, military. Nah, just that I was talking about how I would cook spare ribs. Well, this is how I would do it to make sure they're tender. What is the tenderism of Paul? This is years before tenderism. We're just talking about this. Well, you got to boil it, then you bake it. That's just so.
Well, one final question.
Yeah.
You do a lot of volunteer work
Yeah.
outside of your day-to-day job and your career. Can you talk about how important that is and how it builds goodwill and how it led to you meeting with the mayor?
Again, I'm so glad you brought that up. Yeah, it's that's something where it's really important to me, and it's just no one cares how much they know until they know how much you care, right? It's just being involved in my community, being involved in things that I care about keeps me happy. I was saying, get a life and have hobbies. I think when you're doing something for someone else that they can never pay you back, they can never say thank you. You're doing something out of the kindness of your heart. That makes you feel like a better person, right? And it'll be different if you and I worked in the nonprofit or volunteer space all the time. No, we're working in big bad corporate America. So you better have something that you feel good about. There's because there's
You
there's
have to
yeah
get
there's
some
some times it's like,
fulfillment.
man, am I just a part of the machine?
Yeah.
What am I doing to go out and be kind to someone
And give back.
Yeah. So it's just, that's something that's always been important to me. And yeah, I had a chance, like Mayor Lyles just announced their retirement, and I talked about it a few times, and someone's like, wait, you got a call from the mayor, you got to go meet her in her office. I'm like, yeah. He said, just what was the donation level? I said, no, I wasn't doing a $2,000 plate dinner. I'm not a Fortune 500 C. I wasn't trying to, get an incentive to move jobs to Charlotte. I'm just a guy that I had a kid in school and wanted to get more involved in the charter school, and want to make sure that kids that don't have the opportunity to get a top-notch education can do that too, and I wanted to be a part of that. And that's how I got in the audience with the mayor. And it was just so refreshing to see her as a public servant that really cared about that stuff. And she didn't care about my banking experience. It just was like, no, well, why is this important to you? What does this school mean? What did you look at? How are you guys finding different community partners? And that was such a valuable thing. And it just you don't have to be internet famous or Wall Street rich to have an impact in your community. And that's something that really stuck with me.
Well, Al, thanks for your valuable insight. This was really good. Time flew by. Can't
Yeah,
believe
yeah.
we've already been talking for an hour. But for anyone that wants to follow your journey and follow your post, because you're active on LinkedIn.
I am.
You do a lot of speaking engagements and,
Yep.
and a lot of posts and stuff. So how can someone follow you?
Yeah, follow me on LinkedIn, Al
Okay.
Kirton. Just feel free to shoot me a note as well. Try to get back to you as much as I can. But yeah, just be honest with yourself and make sure you're forging true relationships, and success will come, and you'll be happy with the success at the same time.
Well, cool. Well, I value our relationship.
Yeah, absolutely.
Being a part of my close circle. So thanks, Al. I appreciate your time. So yeah.
I appreciate it. Thanks, man.
Thanks.
Thanks as always. Thank you.